Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. First thing we got to do, of course, is knock out our standard disclaimer. Let's get that out of the way so we can get on to trading. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. All right, good. Now that that's out of the way, let's get over to some charts. Tonight we're going to start with, what is this here? YM on screen 1. Let me get you switched over from screen 4 here real quick. All right, so this is the first of a two-part series on trading, spotting, and trading trend changes. Just a quick question for the team here tonight. How many of you struggle with seeing when a trend has changed? How many of you struggle with that in your trading? Always seems to be a challenge. You know, are we still in the trend? Are we not in the trend? You know, you can just type in a yes or no, you know, or a Y or an N, you know, whether that's a hot issue for you or not. Is it still trending? Is the trend stopped? Should I be taking longs now? I was shorting the market, you know, and all that kind of stuff. Yeah, that's a big one, Byron. Byron put in here, and I think this is probably a timely topic for everybody in here, is how do I know the difference between a big pullback and an actual trend change? We're going to cover that quite a bit tonight. That I think if you were to boil down the topic of trend change, that's probably one of the most important pieces of it, is when a market is retracing in a trend, how far does the retracement have to go for you to remain in the trend, and then when does the trend actually change? So before we get into too deep into that and the mechanics of trading it, I want us all to get on the same page as far as what a trend is and how we trade it. So I'm going to start with YM right here. Of course, we all know we're in the after hours, what's actually technically called the Asian trading session, which starts around 5 o'clock Pacific. It's just kind of getting kicked off. By the way, for those of you who are night owls and like to trade after hours, let me see if I can show this to you real quick here. I think there's any way to show this. Go into your instrument list. So you're in the Asian session right now, so you'd want to be looking, if you wanted to watch for some activity between hold on a second. Instruments you can take a look at would be 6A, the Aussie futures, and 6J, the Japanese yen futures. If you're looking for some price action in the afternoon or evening session, like right now, between now and midnight. And then of course overnight, starting at midnight, is the European session, so you'd be looking at like the British pound, 6B, 6E, Euro futures, and DX, the dollar index, and 6S, the Swissy futures. You know, if you wanted to watch something to trade. So that's kind of that. Now right now, we are in after hours as far as the equities are concerned. The close of the market was just after 1 o'clock Pacific, so that would have been right in here. So let me ask you this. Are we in a trend right now on YM? And if so, what is it? Which begs the larger question is how do you know you're in a trend? How do you know you're in a trend? What is a trend anyway? Those are all hypothetical questions. The question for now on the table is this market in a trend, yes or no? YM, right now, as we speak. This is where it's at right now. It's a live data feed. And if so, if you say yes, it's in a trend, then what is the trend? Okay, yes. Yeah, we're in a downtrend. Yeah, we're in a downtrend. The trend is down. So we'll get on the same page here as far as what a trend is and how we define how to trade it. So the characteristics of a downtrend, of course, are generally speaking, we will have a red background. All of the bands that you see here, including the mid band, the thick chunky middle one here, are stair stepping down. So this looks like stairs going down into your basement if you have a basement, or from the second floor to the first floor. You're stepping downstairs. So that's what it looks like. Generally speaking, you'll have predominantly red bars. This line, this sort of snaky looking line, is actually the stealth. That will show up and it will be red. So obviously you can see from about, looks like 12:51 Pacific time, kind of right in here, we went into a downtrend. Now the question is this: where did the trend actually change from up? Now I think we all can pretty clearly see that the trend over here, late morning here in California, this would have been around 10:30 Pacific right here, we went into a nice protracted uptrend move here. So I'm going to give you three choices. I'm going to start this off easy, and then we'll make the questions a little harder as we look at more complicated trend setups. Let's call this point 1. Did the trend change here? We'll call this number 1. Did the trend change here, which is number 2? So you just type in a number. Or did the trend change here? We'll call this number 3. One, did the trend change? The trend over here, just for people are still coming in. Welcome, welcome, welcome. We're kind of getting started here, so you haven't missed a whole lot. And this is recorded, and we'll put it up on the web tomorrow morning. So the question on the table is where the trend was up over here late morning, and we have 3 points: 1, 2, or 3. Where did the trend change from up to down? Okay, I'm seeing a lot of answers coming in here. Hey, Maurizio, ciao bella, my friend. Welcome, welcome. This is the trade. This is the chart I trade with. Yeah, the only thing I've done here, Maurizio and everybody, is I've disabled the temporarily the predictor indicator. You can simply toggle this on and off if you want. For simplicity's sake, for tonight, I'm just going to leave it off. So I think this is speaking right to the questions and the issues that came up when we first started the webinar, which is how do you know the difference between a deep retracement and an actual trend change? So let's get into the meat of talking about what that is. Now, excuse me. Got a little tickle in my throat tonight. My apologies. We'll try to work through it here, no problem. So let's start over here. Let's talk about things that we need to look at, and I'm going to keep this as simple and straightforward as possible, so I'm not going to get into making anything too complicated, and I think simpler is better. That's an old saying, ikaula auna, simpler is better. Notice how at the tail end of trend moves, you get characteristics of markets doing things like this. Now you see, this is called the thrust. We all know in the case of a trend, you have two types of price action. You have what's called the thrust, and you have the retracement or the pullback. Here's the retracement. We all see it, right? Now, when you get trend exhaustion, many times you will get one final push that will either do one of three things. It'll break the swing of the prior top, just slightly, as this one did. Sometimes it'll hit it right on the button and stall out and reverse. Or sometimes it gets a little gasp up into here and can't quite get back to that top and then rolls over. So that's the three areas you want to kind of watch when you're getting a little toppy on a trend move. This is called what? A double top, right? We call those in the room all the time, right? Those, you know, as it's happening, you can see them happening, right? Look, it's looking like a little double top up there. Let's see where she pulls back to. Now, for trading purposes, we all know that in a trend we buy pullbacks. So the uptrend is up. When the trend is up, we are buying pullbacks. So when the market pulls back into support, we buy it, and there's your long trade. There's your long trade. That's the last long trade of the trend right there. Now, we like to, let me give you kind of a zone. When I look at a chart, I think of it like this. I think of it like a zone, okay? And this is a healthy way to think about it. You have sort of what I would call the outer zone, which is the uppermost band, right? You have the mid band, the middle of all the bands, of course. And then you have the lower zone, which is more or less out here. Now notice what happens is that the market comes right through this particular market, YM, around noon Pacific time. We come down and we plow right through the mid-band and we go almost all the way out to the outermost band. This is called a deep retracement. We used to call it a deep probe. Okay? And technically speaking, the way we teach this is that you may hear this referred to in webinars and in the room as a phantom trade. You hear phantom trade all the time? This is what a phantom trade is. The market comes all the way through the mid-band out to the outermost band. In the case of the uptrend, that would be here. And then it bounces and resumes an upward move. So if anybody says, I bought that phantom, or, you know, I bought the bounce off the outermost band, that is what they're doing. They're getting in down here, you know, whatever tool that you use. I'm not going to get into the tools too much tonight. I want to focus on just trend changes. So by hook or by crook, you're long from here. Technically speaking, to answer the question, are you still in an uptrend or not? The answer is yes, you are still in an uptrend and you are still buying. Now, notice what happens when we come, this was point number one. So point number one is definitely not a trend change. Okay? Now we come back up here, we get an upward thrust. But what happens? Right here. Let me ask a different question. What would need to happen with this thrusting move right here for us to confirm trend continuation when it comes to point number two? What would have to happen when market came up to point number two for us to confirm that the trend is continuing? What needs to happen right in here? It has to put in a higher high. Exactly. So for trend continuation, and it's pretty straightforward, everybody's typing that in there and you're correct, we would need to have done something more like this, right? Come up, at least get back up to here, and for a higher high, technically break it. That's called trend continuation. So did that happen here? Yeah, Doug, right. Failed to take out the high. So here's what's starting. I like to draw an analogy, and maybe you'll find this helpful in your thinking about this. Is that it's like breadcrumbs. You're following some clues. Clue number one: potential trend change afoot. Double top, triple top, toppy market, can't get higher. Clue number two: it pulls back in some kind of deep, you know, taking out. Let me just be real clear. It takes out the midband. Okay. And it finds itself out here down towards this lower area. That's clue number two. Because if you notice over here, when this buy program was running in the market, which is what those are, right? This buy program's running in the market, and the buy program is you know, getting in and out, and it's pushing. But notice how strong it was. This was a very strong buy program and a very bullish move because the retracements were very shallow. Yes. So buy, thrust, very shallow retracement, minimal amount of profit taking. Up, pulls back just a little bit, pulls back, stays above the midband. Midband is key. We watch the midband all the time, yes? We get another retracement, which can't get quite back there, profit taking on the buy program, yes? We find some equilibrium, we take out the top. Now we see a double top forming when this comes down here. A lot of traders, and I understand this, are nervous taking these outermost trades. Was that fair to say for some of you? You're nervous getting in here because when it goes all the way down to here and the bars turn red, you're starting to, your spidey sense is kicking up and you're starting to say, wait a minute, this might be a trend change. If I jump in here right now, this could flip on me and I'm going to stop out. So you're very nervous taking this type of trade. Okay, I see a lot of you are saying yes. What can you do about that? How do you fix that? Well, there's two choices. You can practice trading it in sim, and here's what I would suggest. If you get in here with the box tool or the line tool or however you buy your way in on this bounce, you want to treat this very especially in the fact that when you do get your bounce and you get your scalper move, and we'll look at this on there'll be other setups like this where I can talk more about this, but as soon as you use that break-even plus part of Object Trader, plus minus, break-even plus minus. So let's say hypothetically you had a 10 ticks initial stop, so your stop is sitting down here somewhere. You get your pop up for a couple of 4, 5, 6 ticks up into here. You want to immediately get this stop up within 2 ticks of your entry price. Let's say you're filled long on this bar right here. Out of a region box. You have a region box here. However you got it. Let's go ahead and put a box there so it's clear. All right, you boxed it in. You're filled long on one of these bars right here. Depending on how you boxed it, you're long from this bar or this bar right here, and your initial stop is sitting. It's normally 10 or 12 ticks depending on your settings. So the initial stop is sitting somewhere down in here. And you don't want to get a full stop out. So if you don't use break even plus minus, then you can manually drag your stop right up behind your entry to protect it. Okay? That's when it gets up into here. That should alleviate some fear, because if you can get the scalper and it flips on you, let's say you made hypothetically 6 ticks on a scalper move up to here, right? And then you go up and it pulls back and your stop is now moved up into here. Even if it flipped and took it out, you'd still have made, and you were 2 ticks behind your entry, you still netted 4 ticks, yes? So it's really a free trade, pretty much. The other thing, so I would practice with that on those phantom trades. I would practice that, exactly what I just described there, okay? Let it move in your favor, and when it does and you get your scalper, get your tight stop up real quick. Don't hesitate on that, okay? Here's the second thing. And I'll just put this as straightforward as I can. Phantom trades aren't for everybody. You might practice this thing in sim all day long, or even with some live money, and practice, and for some reason you get in and you always get stopped out and you can't ever seem to see these right and not make any money. If that is you, then should you continue to trade phantom trades? If you've tried and you can't do it, should you keep taking this type of trade? Yes or no? It's like banging your head against the wall, yes? Don't do it. You can pass on phantom trades. It's that simple. It's not complicated. This isn't it. Out of all the trade setups we have, this isn't a trade for you, so you don't take it. But I would suggest I would keep this in your toolkit if you can and practice it in sim with just the way I described it. Now, what I'm hearing here is that some people get in too early. Yeah, Walter says if you're a little crazy, keep banging your head against the wall. Yeah, I mean, that's really there's 2 or 3 things really that are going to really lead to your success in futures trading. The first one is, and I beat this drum all the time, is instrument selection. You have to pick the right instrument to trade and then get very, very good at it and then leverage up. That's how you make good money in the futures markets, okay? Crude oil and some of these other things, if you tried some of these other instruments and you don't make money at it, just like this phantom trade here, well, then you need to go look at another instrument, right? Now, anyway, back on with this. So we've noticed we have a couple of breadcrumbs that are laying in front of us here. The first one was our double top. The second, we get the phantom trade. Everybody sees that. And then we make note of the fact, I do this all the time when I'm looking at live markets, that this did not get back to here and it did not take it out and it's rolling over. And then this swing is broken right here. So if you said 3, we had 1, 2, 3. Where was the trend change? The trend change was right here. Right there. When that broke, you know, some could make the case, well, you know, it's still sitting in this outermost band. I'm gonna point out a couple other things in addition to the breadcrumbs. While this is all going on in here and it's kind of oscillating around the midband, what is happening to the background color? Is it still green? Has it turned to red yet? in here, this area right in here? No, it's that neutral, opaque kind of color. This is breadcrumb number 3. This is telling you, hey, heads up, something's going on here. Trend change may be afoot. Now, if you are tried to make the case that, well, technically, Charles, you know, with all due respect, you're still sitting in this outermost band. How do you say that that's an actual trend change? Well, if you don't believe that, when this comes up, gets a second lower high, so you have a lower low already right here, yes? Right in here. Then when this breaks, without question, you have changed trends, because now at this point you have 2 lower highs, a lower low, another lower low, right? 2 lower highs, 2 lower lows, and your background is turned red and you're breaking down. So the best entry on this trade would be right here, on this little retracement right there, and filled short on that bar. That was your trade right there. That was your short trade. So generally speaking, if you're in an uptrend, you are putting in higher highs and higher lows, stair-stepping like you're going from the first to the second floor. Downtrend, of course, is the complete opposite. You're stair-stepping down. Bars are red, background is red. And for the most part, if you're oscillating between the outermost bands and your background color is neutral, then either one of two things is happening. Either you're in a range now, which can happen. You're in a range, yes? Because markets don't always go from up, spike up, V top, boom, right back down, right? They don't go all the way down, V bottom, boom, right back up. There's normally some transitional a piece of time where the market's sorting out whether it wants to go continue up or it wants to reverse and head down. So sell programs kick in, sellers all over the world get short, and the shorties push it down. That's probably as most straightforward. Before we move on, any questions on this? This is probably a textbook diagram on how a trend change works. David says, when there is a move from a range-bound market and then it trends for a big move from 80 to 100 ticks, that will power the predictors. Like it out there. Is there anything to give you heads up the thrust is going, that a thrust is going to happen coming out of a range-bound market, David? Yeah, we'll look at that. In fact, let's go look at that. He's saying, when you're in a range, how do you know eventually when the trend kicks in out of the range? By the way, there's your predictors. Pretty straightforward. Most of you know, of course, that when the market's moving up, the predictors are moving up. See that? Right? See it? When the market's moving down, you see the predictors are following it down. Yes. And then when you're range bound, the predictors are kind of right next to each other, generally very close to or at the tops and bottoms of the trading range. How do you know it's leg 3 versus C? On what part of this chart are you referring to, Doug? I didn't really call a ABC or a leg. I didn't really call any of those in here. Where would, you know, I'm not really approaching it in that manner. I know Gary looks at it that way, leg 1, 2, 3, or ABC. You know, the way I trade, I focus a little bit more on the price action and the swings. I'm not really counting ABC in here. I'm not really sort of paying attention to that. I do watch where the swings go. You know, is it getting higher highs, is it getting lower lows? So at this point right here, definitely at this point right here, this was a heads up. The trend change is probably coming. And really the key was what it does when it gets down into here. All right, good. Is there any more questions on this part, on this piece of it? Because we need to move on. We need to look at some other things. Let me pause the screen and bring a couple other trading price action scenarios up. Let's speak to the question from David H. here on how do we know when there's about to be a move coming out of a range? Here's a perfect example of that here today. Here again, I keep going back to this sort of breadcrumb analogy where you know, from my experience, things just don't like automatically happen. There's normally clues that come along with what the market's doing. It's leaving those clues for you, and you have to be astute enough to see them. Now let's go back over here. We can see that from about 8:30 Pacific all the way till almost 10:30. For about 2 hours, YM was more or less stuck in a market that looked like this. You had some resistance up in this area here, right? And you had some support down here, down around 53 and then 61. Now, by the time that you got over to 10:30, this area right here, what was the breadcrumb starting to tell you? What are they? What would be the clues that potentially there was going to be a break to the upside? What were the clues that you see right here that are portending that perhaps a break to the upside is imminent? What are the clues? What's the breadcrumbs right in front of us on this chart right here that we could have made note of as they were happening and we're watching it? Let's take a look at the chart. So like when you look at a chart in the morning, hopefully this will change a little bit the way you look at it, right? Let's take a quick sip of tea here. So in other words, what you're trying to do is you are trying to train your trading eye to be, astute enough to pick these little breadcrumbs up in the clues, because, there might be times like after hours or pre-market where you might be trading some instrument and you're not in a room. You're not in a room with us. So we're not calling stuff out. We're not pointing all this stuff out to you. So you have to be standalone sufficient in and of your ability to read the chart so you know the proper thing to do, yes? Yes, here, let me put the predictor back on here. Maybe that'll help you too. What's happening right over in here? Stand by 1 second, please. Sorry about that, I'm back. All right, we're getting some good answers coming in here. Higher lows, higher swings. Yeah, here, look. So for me personally, what my eye goes to is I always look at the most recent swing level. So starting from right here around 9:45 Pacific, right in here, we put in a low, yes? We come right back up to our top of trading range here, and we hit our head, and it rolls over. We're not surprised by that, right? That area's been resistance since 8:30 in the morning. However, and I think most of you made note of this, excuse me, we come down here and we don't even get back to this low, do we? We don't check it. We don't break it. We can't even get to it. What else is happening here? What's the color of the background? Neutral, right? What do we say over here when we're trading in between the innermost and outermost bands and the background is neutral? Yep, you're in a range. That's exactly right. You're in a range. And what is portending what might happen, just like over here, when you got a lower high and you broke the support level, what is happening right here? You come up one more time, right? You check that swing one more time, almost getting all the way to it, but you can't quite get there. And then you put, hold on, sorry. I keep getting this little tickle in my throat for some reason tonight. I don't know what the heck's going on. Sound is full of echoes. Here, I got a fan. Let me turn the fan a little bit. Sorry about that. Is that better? Is that better? It was like a wind sound. I had a little fan running over here. Yeah, right here. Right here. Yeah. By the time you get over here, you have one low, you have a higher low, and this is a second low. And we start to break up. So the trend change technically happens when you take the swing out to the upside. Now, if you said, well, I'm really not sure, in real time, I might not have been convinced because it's right at the top. Definitely when you got this thrust move right here, there's no question that the trend has changed because now your background is green, the bars are blue, you're getting higher highs and higher lows, and so you're buying this retracement. You're getting long on this retracement right here. So does that answer your question? Who asked that question? I think it was David H. Yeah, so this is a good example where you're coming out of a trading range that was pretty much bound by the outermost bands for the most part. The clues, the breadcrumbs that were being dropped in the markets for us to observe was the higher lows, building pressure at this point over here, which then of course eventually broke. Buyers, bulls kick in, buy programs kick in, and they take the market up. Yeah, Thomas and several people are saying thank you to you, David H., because that's been a big question and bugaboo for a lot of traders. I know it is. How do you know when you're ready to break out of a range to go, where it's going to break up or down? Well, this is the clues. This is the clues. Just like over here. You're in the neutral zone. The background color is neutral. You can't take out this level, and you can't break the bottom band until eventually it does. So when this broke over here, of course, you go right into the downtrend. Over here, the reverse was happening, right? You're getting a couple of higher lows. You pop through the top, and now we know, the resolution of that was up to the upside. Yeah, I mean, the predictors would have helped with that too. Of course, we know when you're in the neutral range zone, the predictors hover at the swings, where the more or less the top and the bottoms of the trading range are. Here's a good example here where top of the range was up here, bottom of the range. The predictors hover. They just kind of go flat, right? They're not stair-stepping up or down. All right, let's pop a different market up here and look at some other things. What else do we want to put up? Type it in. Please take a second and type in an instrument or two. I also see some questions. Pervez over here asking, would you have boxed this with a bias? Given the fact that this was, or even you could have boxed it like this. It did sit here for a little while. It looks like about 5 minutes, kind of deciding which way to go. In this particular case, there's enough meat on the bone where you could have maybe let it trade either way. You could have actually, it's rare to do this, but sometimes you can box it in here. Of course, by the time it got to here, this would be a bias to the upside in case you got a little deeper pullback from here. By this point here, you're buying. And no question about it, the retracement that really got you long was this one right here. So, but there were a couple of opportunities to get in. This mid-band box here, because it was that second higher low, portending a possible breakup. And then occasionally, rarely, we'll do this where we get consolidation a little bit away from the mid-band, but hovering right up here, bias to the upside in case it drops back into the range. We don't want to get sucked into a bad trade, right? A lot of folks asking for a NASDAQ and crude oil. Okay, let's get a crude oil chart up here real quick here, and then late morning. What's the fibs? What are fibs? Abe says. Stand by. Let me get crude oil up here. I think I got that chart ready to go. Yeah. Okay. Here we go. And then we'll put we'll get a NASI up here before we run out of time. I know a lot of people asking about NASDAQ chart. Let me get this YM out of the way. Hold on. Put that over here. Screen 3. Let's juggle this around a little bit. Now, each instrument, and that's why we talk about, let me get the screen back up here on crude, and I'll just show you an overall picture of crude. And let me take the predictors off just for the moment right now. Yeah, okay. So, the instruments that we have in the room are YM, NASDAQ, TF the Russell, and we have crude oil right here. Now think of it this way. We all have friends and we have family and we have relatives and neighbors and all kinds of people that we know in our neighborhood and whatever. And if you think about all the different people all the people, at least I'll speak for my family. I got a family on the East Coast and out here, and relatives and business people I know all over the place, right? And they all have different personalities, right? Some people are easygoing, right? Some people are a little more uptight. Some people are having issues or whatever. And so when you talk to your friends and family, and you over time, of course, you get to know their personality and what they're about and what they're like, and you have some, and so you joke around, or you talk to different people differently depending on who they are and what they're like. Think of all these futures instruments as like people, like your friends and family. Think of a very similar situation. In other words, the price action on ES, for instance, is going to be very different than the price action on YM or even NASDAQ or crude oil for that matter. They're all different. They all move differently. In other words, sometimes some markets can be very choppy and they have a tendency to stay choppy. ES is like that. Let's look at ES. And then we'll come back to crude oil. ES, and we have a lot of people with us that trade ES, and YM is kind of a proxy for it since it's the Dow and the S&P. So in other words, it trades very similar to crude oil. I mean to YM and ES are tightly correlated. That's basically what I'm trying to say. Now, notice that when this was in a range here, it was in a pretty tight range. I mean, this whole range was maybe like 8 or 10 ticks. Very choppy. See how choppy this is right here? Let me take the predictor off real quick. He's very choppy and range bound, and then you did go into a trend. This is very rare for ES to get this large of a move. You generally speaking, a big move on ES is like 20 ticks. Very heavily institutionally traded. It is the largest volume instrument in all of futures. You'll see somewhere it's pushing yesterday I think it was 2.8 million contracts changed hands. The next two largest, by the way, are the bonds and the notes, ZB, ZN, and ZF. Yeah, in terms of sheer volume, liquidity. That's because they're heavily institutionally traded. And what that means is that there's a lot of software programs running in here, scripts, and they're all sort of duking it out. Notice right in here, there's indecision on the direction of this market right here. See it? Here's 5:30. This is the pre-market right here. Basically remain within this range all the way until after 7 o'clock. See it? I mean, you can try to trade ES. You can put a lot of contracts on it. It'll handle whatever you can throw at it, however much leverage you want to be. But you got to realize a lot of days. I've seen days where it stays in this range all day, that big a range, literally. And then you get a big move, and obviously you see the entry, the long entry when she broke out was right here. See how this chart looks a lot like YM? Let's go back to oil. Oil is one of those markets where, how would I say it? She can be a stern taskmaster. I'll just put it this way. If you're trading the right side of crude oil, at $10 a tick, it's twice the risk of the Russell and YM. So that's the other thing to take into account when you're assessing risk. So think of it this way. If you have a 10 tick, we'll just keep it pretty simple. If you have a 10 tick stop on crude oil and you get hit for the 10 ticks loss, you lose $100, right? So it's all about risk management. If you get hit for a 10 tick loss on NQ or YM at $5 a tick, you only lost $50. So that's why it's said that crude oil and the Russell and other $10 instruments, from a sheer risk point of view, are twice the risk of NASDAQ, NQ, YM, and like DX, dollar index. So, that's why we always counsel many traders who are kind of in intermediate stages or still kind of learning to try to cut your teeth on the lower risk instruments like YM and NQ, because as you transition to real money, your risk is much lower. So back to oil here. If you are on the right side of oil at $10 a tick and you get these nice moves like this and you catch them, you can stand to make a lot of money on trading crude oil. Here's a thrust right here. Here's a couple of pullbacks on the entries. I'm not going to get into the mechanics of getting in and out of these trades. We're looking at more of a sort of a 10,000 foot view right now. I'll drill down on this a little bit later. But what I like to see, one of my go-to trades is mid-band boxes. I love mid-band boxes, especially in a trend. But if the market is trending and it gets anywhere near that mid-band and it gets a nice little box formation, I'm all over that. That's one of my go-to trades, no question about it. And sometimes when you look at crude oil, this is what we call a good box because it has a very nice tight consolidation. Over here is not such a good box. Because when the market is chopping around the mid-band as it did right here for looks like almost an hour, maybe longer, hour and a half. You can't really box this in, and you can see that with the neutral background, it's really not clear what direction the market's going to go. Everybody see that? The difference between this box here and this box over here, and oil does this a lot. You're going to find oil chop around a lot like that, in this big, huge kind of choppy. So to be honest with you, and you hear this in the room, I'm very, very picky on where I get into crude oil. In other words, it has to be like a very high likelihood primo type setup for me to take it. I know Gary is very aggressive in how he trades crude oil, and he does very well at it. I'm a little more reserved because, you know, truth be told, in the early days, crude oil kind of spanked me around a little bit. I learned a lesson from that. If the only other way to handle a large choppy area, when you see the background went neutral here, you're not taking out this high and you're not taking out this low. Eventually you do break it. If this ever happens to you, you know, if you avoid this area, notice what happens here. We break the back or bottom of that little box. We pull back. This is the same price pattern we looked at on YM, right? Almost exactly. You get this nice retracement, and then you take that support level out. So there's no question, of course, when you get down to this point right here, that the trend has changed. The background's red, bars are red. We're putting in lower highs, lower lows. The stealth is there. The stair stepping is happening down here like this. If it's heavily traded, how come it doesn't move very far? Diane, I think that question was related to ES. Because there's so many scripts and programs with the big banks, Goldman Sachs, Barclays, banks all over the world, traders all over the world. You know, the software programs are fighting each other for ticks, And so if two software programs are running, or in the case of ES, you're looking at thousands of programs running, thousands all over the world, and they're buying, selling, and buying, selling, what would you expect the price action to be with thousands of scripts buying and selling, buying and selling? Yeah, it's going to be stuck in a range because they can't, you know, they're kind of canceling each other out in some respects, yes? Let's go over here. I did want to look at something real quick. I want to look at the pit open on crude at 6 o'clock. How many of you in here trade crude? Just show of hands. Just type in a Y if you do. How many of you come into the room early and trade crude with Gary? He opens up, I think, 5-10 minutes before the pit open at 6. Usually gets a chart up and starts looking for trades at 6 a.m. Pacific. Well, I see a few of you do. Okay, good. All right, well, let's look at the pit open today. Stand by 1 second, please. All right, 6 o'clock Pacific was right here. Let's see, 6:01 was right here. So 6 o'clock would have been just to the left of this little line right here. So you were already in a range coming into the morning, which looked like green. So you were technically sideways, but you were green. So, and the reason it turned green, obviously, is because overnight you had this huge thrust in the pre-market session. This would have been the European session trading oil. Excuse me. And you went into a little range that looks more or less like this. I see we got a lot of visitors and a lot of new folks in here. What's the first thing we do when we bring up a chart to trade it? You veterans, I know you know the answer to this. This is for everyone that's visiting and new. What's the first thing you do? I do this every morning when I bring my charts up and I'm looking at different markets trying to decide what's to do. What's the first thing we do? By the way, just a separate comment while you're pondering what the answer to that question is one of the most challenging things about trading is the word discipline. It's taken me a while, you know, a few years. Well, I've been trading for over 20 years, but it took me a while to realize that when you are trading markets and you're sitting in your home office or wherever you trade from, and there's a lot of freedom. That's the plus side. You don't have a boss. You call your shots. It's having your own business, yes? And that's the good thing. The bad thing is you have to be sort of a self-disciplinarian, yes? You have to be able to control what you do and your emotions. And what I'm leading to with this is that I have routines that I do every day. And I rely on those routines to make sure that when I look at something, it looks the same all the time. That way I can make consistent, good trading decisions. If you come in one day and one day you draw a line, you draw a line over here and you draw, a line somewhere over here or something, and then some mornings you come in and it's too much work, you don't draw the lines, or you're tired, or it's late, or you didn't get whatever the reason is, you decide I'm not going to put these lines. I don't have time for that. I'll just look for a trade, and when I see it, I'll just take it. I know some people do that. I know. Well, what's happening is you're not applying any structure or discipline to your trading, right? And over time, if you want to trade for a living and trade to retire or whatever your aspirations are, you have to have some discipline. So the first thing that we do, the answer to the question is we put lines on the chart. It's as simple as this. Here we are at before 6 o'clock, and we're looking at our crude chart. And the first thing that we make note of is that there is some support level right in here. This is how quick and easy it really is. It's not more complicated than this. And then we notice that there's some resistance more or less kind of up in here. Yes? See the swings? And that's it. Done. How long did that take? Like 30 seconds? You just look for where the market swings are, and you can use the predictor. It can help you too, right? And you put a line at resistance and you put a line at support. Now, I think we all would agree that as long as it stays within the confines of this area right here, that you're in a range, right? And this is actually bounding what? Outermost band here and outermost band here. And so when we come into the open and we get a neutral background, what do we have here? Trading range, right? Trading range. We know that with these lines and the neutral background, we know where support is, we know where resistance is, and we know that we are not trending. We are in a range. Yes? Now, at 6, right, I'm going to blow this up so we can talk about this. When this happened in crude right here, right before the 6:30 equity market open, I'm going to show you this. Let's pretend it happened in real time. Ready? Is it tradable? Well, it depends on the size of the range. What's our rules? Veteran traders in here, I know you know the rules. What's our rules for trading a range? What allows us to determine whether we should trade a range or not? We have rules around that, right? What are they? $20 to 25 tick minimum. Yes. Ideally, you're at 25 or 30 plus. So to answer the question with that, no, it's the size. Thomas, we're talking about the size of the range. Is it tradable? You tell me. Everybody in here tonight. Look at this chart. Is this range tradable, yes or no? Based on our criteria. Just type in a Y or an N. Yes or no. It's that simple. Either you can trade it or you can't. Yes. Yeah, it's tradable. How do we know? Well, it supports down here around 70, 43.70, and resistance up here at 05. Does that meet the criteria? It's a 35 tick range. Yes. The minimum was 20 to 25 ticks. You have a 35 tick range. It is absolutely tradable. Absolutely tradable. So I don't know if you caught this, but technically speaking, this was a buy off of this area right here. I don't know. Gary was just opening the room at this time, 5:55, so I don't know if you caught that or not. Now, let me advance the chart. So here we are. The pit's open. We have this thrust move that happened up to here. We're still inside the range. The background is neutral, right? And the market comes down and it does this. Here, let me put my line at technically speaking, the support's right here. I'm going to really blow this up. What is happening right now at 6:30 Pacific right here? What is that? What kind of breadcrumb might that be? What kind of clue are we looking at right here? Look at the chart. What is this? What just happened right here? 6:30, 6:31, 6:32. Equity markets are just opening up right here. Crude pit's been open about half an hour, plus or minus. Can you see my cursor moving now? Cursor moving right here. I'm circling an area right over here. What's happening right over here? Sorry about that. I think I was paused. Everybody see this? It's a higher low, right? Isn't this a higher low? Here's the breadcrumb right here. Here's the bottom of the range. It's been the bottom of the range all the way in the pre-market. Here's support. Let me ask it a different way. Did this swing get all the way down to the bottom and take it out? Do you have a downtrend here now? And the second part of the question is, based on your experience in seeing this before, what might happen after this? We're looking at our clues. We're picking up the breadcrumbs. And we're thinking ahead. This is where we have to, a lot of traders I've seen over the years, so many traders are in reactionary mode. Well, I gotta be convinced that this is happening. So I'm gonna let the market move. And then when I'm convinced, then I'll pull the trigger. So there's no real sort of, and this is a epidemic, unfortunately, with a lot of traders, is there's no sort of thinking ahead. Picking up the little clues that are coming at you and looking at the price action and starting to think, okay, I see this happening. What might happen next? And if it happens, what am I going to do when that happens? So it's not like you have a crystal ball. You're not projecting the future and telling what the market's going to do. You're just simply looking at what's in front of you and preparing yourself, yes? Yeah, it's a higher low. We could be getting a move to the upside, yes? Right in here. Could you box this in? Sure. Could you let it trade either way? Yes. I don't know how much I don't know if I would have engaged the short side, to be quite honest with you, because there is support right here. So, in other words, you might get sucked into a short, just get a couple of 3-4 ticks, and then it's right back and you stop out. In the case of the short side with this scenario right here, you'd almost be better off waiting for it to do this with the thrust down through support, very clearly taking it out, coming back up into here, boxing it in, and look for a rollover short, yes? That's how we would approach the short side. The long side, you can box it in. We're looking for a break up. Okay, everybody see that? And what happens right here? Takes it out. Now, if you didn't get in this box right here, let's just say that whatever, it came, maybe you saw the clue, you saw the breadcrumb, you just didn't take it. Where is another place to get in? I want to really blow this up over here. You can type in a time or a price level. So this is the trader that didn't get this box for whatever reason, but there is another spot to get in. Where is it? Either time-wise, down here, like a time, or a price level over here. Time or price level. You're not in. You see it's broken resistance, and you want to get in. Where do you get in? Obvious. I'm kind of showing the obvious. Obviously, we know it's gone into an uptrend, so it's a buy. We're looking for a buy. I see some numbers. I see some times. Perfect. Right. This bar right here was your entry. This support level. So let's talk about what happens. This happens all the time. You're going to see this price pattern all the time. It's going to become like in the back of your mind, you're going to be like, I've seen this 1,000 times. I have a pretty good idea on what it's going to do. Normally what happens when you come out of a range like this and you go up or down, we know that the top or bottom will get broken by some amount. The thing you don't know is how far it's going to break it and run before it pulls back. Sometimes it can go way up and then you wait for a pullback, right? Sometimes it can just barely break it, as it did right here. Looks to be about maybe 5, 6, 8 ticks, something like that right in here, yes? And then we pull back and we find support. Now, the challenging part of this trade entry is we don't know the depth of the retracement, right? It can come a couple of 3 bars. It can come all the way to stealth. It can come all the way back down to the mid-band and get another higher low and then bounce. So how do we deal with this uncertainty? This is a question we get all the time. How do we deal with the uncertainty of not knowing how deep a retracement is going to go? How do we trade this? How do we know to get in? What tells us, what dictates us to pull the trigger and take the retracement trade and get in? What is it? By the way, I'm sorry, I should circle back. Everybody said 6:33 Pacific, which was the time component of the correct answer. And then if you said anywhere here around 44:04, 44:05 on this bar right here was your long entry. You were correct. Yes, that's the place you got in, right there. So the way we do this is we look at, yeah, that's a good question. How do you know? Well, we have several things that can help us. It's not always conducive to us to draw a region box. We don't always have to do that. We have other tools. We have a line tool, and we have a ray tool, and we have a Viper tool. And so what you want to do is you draw your retracement line like that. And then you look and you trigger the long side. You put the ray on from the object trader. You activate the long side only. So what I'm saying is that if these bars continue to drop all the way down into here, until that line is broken, you're not getting in, right? So you simply draw the ray, so it would extend out down into here, right? Activate the long side, and as long as it was doing its little retracement thing, excuse me, wherever it's going to bounce, it will bounce, and then eventually, of course, it will get you in, even if it went all the way down into here. Yeah, you need some resumption. That's really what it comes down to, is you're looking for, in this case, a resumption of buying to push the market higher to the upside. And of course, you see that was very shallow retracement, and it got in right there. All right, good. I'm going to do one other thing real quick. Okay, I promised NASDAQ. Let me get a NASDAQ chart up, and I know we're actually over 6 o'clock, but that's okay. Let's go a little bit longer and I want to cover just a couple other things on the NASDAQ chart, and then we'll wrap it up, okay? Appreciate everybody sticking around. Running a little bit over here. It's all right, we're good. NASDAQ chart loading, stand by. There's a very important takeaway that I want everybody to know that you can start using tonight or tomorrow immediately. This will be like this is like a little tip. It's like a little tip thing. Like a little tip. All right, here's the question. Here's your NASDAQ chart right here. All right, I'm looking at this chart right here, and this would have been, well, this is after hours. Yeah, so it's about an hour ago. It looked like market's selling off pretty good here. Background is red. I see the bands in the mid-band are stair-stepping down pretty clearly here. Bars are red. Got the stealth in here. You know, for me, I'm gonna take a market short right here. I'm going to pull the trigger because I'm convinced, you know, it's all come all the way down here. I'm convinced. Everybody taking this trade with me right here? Market short right here. Look at it dropping. We're going to miss the next big drop here if we don't get in, right? You know, we got to get in on a market order right here. We got to get in right there. Anybody taking this trade with me? Right here. Come on, let's take it. Bring up your live account. Let's load it. Let's load it for bear. 20 contracts short right here. Come on. Who's doing it with me? David H. I'll be on the other side buying it with 20 contracts. Okay. All right. Sure, let's do it. No, Mr. Willie's on board. Okay. All right. Okay, here's the takeaway. This is the final thing I want to say. This is extremely important, and if this entire hour, if you take anything away that is of good use to you, it is this one right here. We never, ever, ever take a trade when the market has done the thrust part of the move. We have to be very clear about this. We are retracement traders. When the market thrusts, is pushing in the given direction, which is either up, like here, or down. That's called the thrust. And the reason we know it's a thrust is because swing levels are taken out and you're getting market trend continuation. Excuse me. What I see a lot of traders do, and I'm getting back to this whole notion of being convinced, and I know I'm speaking to some of you in here tonight, so this is really timely, is you need to be convinced. And when you get convinced is when the market goes down and it's hitting fresh swing lows. Now you're convinced and you want to jump in right here. And you do. Some of you, you know, I don't know how many of you, but some of you would actually pull the trigger and get market short right here. Now watch what happens. Uh-oh. Uh-oh. Do you ever feel that pain in the pit of your stomach where you get that sort of sick feeling? We call that feeling heat. So in other words, you got in almost right at the low. Right down here. You got in right at the low, and now the market is retracing against you, and it's going to come up and take your stop out. And know what's going through your head. Here's what's going through your head. You know how I know this? Because I lived through this for years, many, many years ago. Oh, it's going to roll over. It's going to roll over. It's going to roll here with each bar. You're going down, right? You see that negative, negative, negative. It's going to roll over. You're in what's called a hope trade. You got in at the thrust. And so you're in a short squeeze in this case here, because what's happened is you got in at the very bottom and now the shorties are starting to cover. It's coming all the way back to the mid-band. And what should we actually be doing right here? By the way, you know, you probably stopped out of this trade. So the other thing going through your head is, you know, this market, no matter what I trade, it seems to go against me every time. Why does the market go against me? Every time I get in, it goes against me. It goes up and it takes out my stops. I get stopped out. I just never, it's like they know I'm getting in and they know where my stops are and they take them all the time. Well, it's because it's a lot of that, of course, is because you're getting in on a thrust move. And the scripts that are running and the traders all over the world are waiting for these retracements to get in short up here. So they're getting in right when you're getting stopped out. You're getting stopped out up here, or not you, I'm saying the trader. The trader who got in here and is getting stopped out is actually getting stopped out right where you should be getting in. Yes? Right? Abe says, stop talking about me. Abe, I'll tell you what, my friend. Everybody in here, we're going to pinky swear and take a solemn oath of trading that we are not going to do this anymore, right? We're not going to wait to be convinced and get in on these thrust moves and keep getting stopped out. If that's you, you have to break that habit because that's the quickest way to drain your trading account down to zero. Okay? We've got to get into retracement mode. We don't take thrust moves. We take retracements, and we look at intelligent places for us to get in, at or near the mid-band or the outermost bands, or when you get a rollover like this. That was the short entry. Ray tool, line tool, box tool, market order, limit order, however you got in here, you got short again. Does everybody see that? Okay, we all pinky swore that we're not going to do that anymore. All right, good. Any final questions? Final questions before we wrap. I appreciate everybody sticking around. We went over a little bit tonight. This was recorded. We'll get it up on the web tomorrow morning, so you can download it. By the way, we'll put it in the, I'm going to stop the recorder real quick here. Hold on.